Producer Price Index. That's our topic for today's Backstage Pass. Well, hey friends, I hope you have had a great week so far this week. Happy Friday. Stocks are down so far this morning. Mortgage bonds are down as well. Mortgage bonds are down about 20 basis points at the time of recording. The 10-year yield is up about 5 basis points. The national average for a 30-year fixed rate conventional mortgage ended the day yesterday at 6.32%, up just a little bit from the previous day, which was 6.29%, kind of what we expected. And today, based on market activity, we do expect that rate to kind of tick up a little bit again, maybe coming in at 6.35%, somewhere around there. Now, what's going on? What's driving the markets right now? Well, it's the Producer Price Index. We've been talking about this data a little bit this week. It's not a huge market-moving piece of data, but because there's a void of other news, it is kind of the news of the week this week. And what it is it's a Producer Price Index, PPI. It's a measure of inflation at the wholesale level, all right? And so today this data was released for the month of November. It showed that on the headline, the data showed that in November, producer prices increased by about 0.3%. That was slightly higher than what was forecast. Year over year on the headline data, well, producer prices did come down. They came down to about 7.4%, but that was still higher than what was expected. Now, the Core PPI data, this is similar to the CPI. It strips out food and energy costs, all right? So Core PPI for the month of November, that was up 0.3% as well. Year over year, it was down as well. It came down to about 6.2%, but still higher than what was forecast. It was forecast to come all the way down to 5.9%. So, really all of the data points came in higher than what was forecast, but the year over year was still decreasing or declining. So it's good news, but still kind of a mixed bag because it was higher than what was expected. So how are the markets reacting? Well, again, like I said, stocks are down, mortgage bonds are down as well. As a matter of fact, mortgage bonds have been kind of jumpy so far today, and the reason why is because of what we call illiquidity. It means that people who were selling bonds and people who were buying bonds, they hadn't agreed on a price yet, and so earlier it was down 5 basis points, then it was down 30 basis points, and it's starting to settle in around, on the negative side, around down 20 basis points. Now, two big questions out of this PPI. Number one, will this affect the CPI? And if it does, how? And number two, will the Fed take notice? And for the first question, will it affect CPI? And the answer is, we're not sure, but historically, it typically doesn't have a major impact on CPI. And the main reason why is because even though producer prices fluctuate, go up and down, the demand in the consumer side, that's what really sets the price for consumers. That's why you see huge sales whenever there's an abundance of supply and not a lot of demand. You see 50% off of this or clearance racks and things like that. There's carrying costs for inventory. So all this stuff affects the consumer prices. So even though there's fluctuations on the producer side, it doesn't necessarily directly translate into consumer prices. So that's the first question. Number two, will the Fed take note? And the answer is yes, the Fed will take note. But how much weight will they put on the producer price index is not really known. We will say this, the Fed is very much focused on the labor market and consumer inflation, all right? So that PCE data that we saw a couple weeks ago and the labor data that came out a couple weeks ago, that data, that's what the Fed is focused on. And the general consensus in the market is that, yes, the Fed is going to raise their Fed funds rate next week at the FOMC meeting, but they're going to decelerate the pace at which they are raising the Fed funds rate. Instead of 75 basis points, the general consensus is that they are only going to raise it by about 50 basis points. Now, that's all the news that we have for this week, but next week is completely jam-packed with all kinds of different stuff that's going on. The headlines, though, next week are going to be CPI and the Fed meeting. But listen, that's next week. We're going to let that come to us. We're going to put that off until then. But remember, until then, stay positive, have a great weekend, and we'll see you on Monday.